Okay, welcome back. Yes, we can just continue with clause number 4. So, out of 21 clauses, we are done till clause number 3. Now, we are going to start with clause number 4. Okay, clause number 4, along with notes, we are going to write. Okay, done. So, let me open this PDF also where I can write my notes. Okay, done. So, this is clause number 4 I am writing now. Clause number 4. Okay, let's have a quick look into clause number 4. Number 4. Okay, in respect of loans, investments, guarantees and securities, whether the provisions of section number 185 and 186 of the Companies Act have been complied with. If not, provide the details thereof. Okay, again they are talking about what? Loans, investments, guarantees, okay, and securities around. Okay, same previously also we discussed about these 4 only in clause number 3. It is just a continuation of, okay, clause number 3. Clause number 4 also talks about loans, investments, guarantees and securities. But however, here the focus is more on what? The focus is more on complaints of law. Complaints of law. There in the previous clause, the focus is, okay, the focus was there on something different aspects. But however, here in this clause, clause number 4, their focus, okay, their focus is on 185 and 186. There are 2 sections called as 185 and 186 of Companies Act 2013, okay, where they impose certain restrictions on the loans to be provided by the company to someone else, okay, to any person or a body corporate. So, this is what it is. Now, for CA final students, it is there in law syllabus, but CA inter students 185 and 186 are not there, okay. For that purpose, we can do one thing, we can have some beautiful notes on section number 185 and 186, so that before you go to the examination, it may not be relevant for CA inter students because it is not there in the syllabus in fact, but we have to have a little knowledge of, okay, 185 and 186. For that purpose, I am giving you little notes for it, okay. Even for CA final students also, they can also write, so that you cannot just, okay, open all the books before the examination, okay, when you read this clause, okay, because it is there in law book. You don't need to open when you study auditing, okay. For that purpose, I am writing some notes here. I'm going to give you some beautiful notes here to you. You can just have it, okay. Now so let me write here clause number 4. Clause number 4 talks about in case of loans, investments, guarantees and securities, okay, then check whether 185 section number 185 and 186, section number 185 and 186, whether complied or not, complied or not, complied or, if not, give details, if not, give details. Now in this notes, what we are going to add, okay, we are going to add the provisions relating to section number 185, section number 186, and if not give details, it is said in the clause, okay, which details to be given, those are to be seen in this notes now, okay. Additional notes, I'll dictate some notes. You can just have a notes here, okay, point by point you can just, okay, write. Now there are some highlighted points here. I just want to let you know. Done. So section number 185, under section number 185, keep the side heading section number 185 and write the first point, okay. Write the first point. Auditor shall obtain the details of directors or any other persons, details of directors or any other persons in whom the directors are interested. In whom the directors are interested. In whom the directors are interested. In whom the directors are interested, because 185 talks about prohibition in providing loans. Okay, this LIGS is there, right? So there is a prohibition on the company to provide loans, investment guarantees and securities to its directors, and there is some approval also to be taken when the loans are given to whom? To any person in whom the directors are interested. So directly to directors you cannot give. Okay, however, after taking some approvals you can just give, in fact. Okay, so approvals. So prohibition and approval, it is discussed in section number 185. Okay, prohibition and approvals. For regarding that approvals we are talking about now. Okay, for that purpose, first of all, obtain the list of the directors, and along with that directors, obtain the list of the persons in whom the directors are interested. Either it can be any company, it can be any partnership firm where the directors are interested in. Okay, obtain that list. Okay, write point number 2. Check the details of transactions. Carried out with such persons. 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 Okay. Check the next point. Check the details of persons from MBP1. Okay, it is the form in which the details you can find, okay, relating to that particular persons. So check the details of persons covered under this clause from MBP1. And the register that is maintained under section number 189. Okay, in the brackets you need to write, what is 189? 189 is the register. Okay, register of contracts or arrangements with directors. It is a register. So whatever the contract we enter into with the director, with the director, okay, those transactions, those contracts or arrangements, okay, shall form part of section number 189 register. In that register we need to maintain. Okay, so this is 189. Okay, and then last point. Auditors should report the non-compliance, should report the nature of the non-compliance. That is, for example, approvals have not been taken. Approvals, okay, beside that approval you can write in the brackets that special resolution from members. Approvals have not been taken. Or registers have not been maintained. Okay, comma, the borrowing enterprise, the person who borrowed, Okay, the borrowing enterprise or the person who borrows is not utilizing the money for its principal business activity. Say this company can give loan to any other, okay, business enterprise where the company's director is interested in. Okay, company's director is interested. Okay, is it possible? Yes sir, it is possible, but only after, okay, passing special resolution. And this borrowing enterprise also shall utilize that money for its principal business activity. Okay, this is the approval which the company needs to take. The company, whenever it is providing loan to business enterprise in which the director is interested in, then it is possible after passing special resolution. Along with special resolution, another condition will be what? This business enterprise must use the money for its principal business activity only, because it shall not directly route the money to director. Because it is prohibited. Okay, because it is prohibited. Providing loans to the director is prohibition. Okay, but providing loan to a business enterprise where the director is interested is possible, but only after passing special resolution. These are the things you need to keep in mind when you okay, read this clause number 4, part 1, section number 185. Part 1, section number 185. Okay, what is to be reported? Nature of non-compliance is to be reported, and along with that, the maximum amount outstanding during the year. So at any point of time, what is the maximum amount, okay, that is outstanding, because it is a loan which is given, right? So outstanding loan during the year at any point of time, what is the maximum amount? That you need to write. And along with that, amount outstanding at the balance sheet date is also written. Okay, what is the difference between these two? Okay, maximum outstanding loan during the year is the highest amount. Okay, but balance sheet value may be different. What may be the difference between these two? Why there will be difference between these two? Maximum amount is the amount of loan we give during the year. Okay, but balance sheet date, when you come to the balance sheet date, there may be some, okay, repayments which may be happened. Okay, which may be there. For that reason, there may be a difference between highest outstanding balance during the year and the balance sheet date. Both the things you need to report here. Okay, both the things you need to report here. See, along in case, okay, if there is any non-compliance, the nature of the non-compliance you need to write, and maximum amount outstanding during the year, and amount outstanding as at the balance sheet date. Okay, with respect to directors, along with that, with respect to any persons in whom the directors are interested. Both the things separately you need to give the details. Okay, with this we are done with section number 185 notes. Come to section number 186 notes. It is very, very important. 186 is also important. Okay, 186, what it is talking about? It is talking about the loans, guarantees, securities given to company, giving to whom? Company giving to any person or body corporate. Company giving loans, guarantees and securities to any person or body corporate. Regarding this, we are writing section number 186. Okay, write point number 1. Okay, it is applicable when company is giving loan, guarantee or security to any person or other body corporate. Any person or other body corporate. Any person or other body corporate. Done. Okay, come to point number 2. Ceiling limit. Keep the side heading ceiling limit. While the company is providing loan, guarantee or security, then there is some ceiling limit on that. Okay, company cannot give, okay, to the maximum extent. So there are some ceiling limits which are applicable. So point number 1, company can provide loan, Okay, up to the higher of following, higher of following, okay, that is point number 1. 60% of paid up capital plus free reserves plus securities premium. Point number 2, 100% of free reserves plus securities premium. Okay, whichever is higher. This is the ceiling limit. Okay, if the loan amount is less than this ceiling limit, less than or equal to this ceiling limit, then unanimous board's resolution is required. Okay, to provide these loans, unanimous board resolution is required. So without passing board resolution, you cannot provide these type of loans, even if it is less than ceiling limit. Okay, unanimous board's resolution. Come to the next point. If the loan amount is exceeding 60, okay, exceeding the ceiling limits. If the loan amount is exceeding the ceiling limits, okay, so normally unanimous board resolution is sufficient. If the loan amount is exceeding the ceiling limits, then okay, special resolution of members is also required. Along with board's resolution, unanimous board's resolution. Okay, unanimous resolution, it is anyway required. If the ceiling limit is crossed, then special resolution of members is also required. I guess you are all getting the point. Okay, done. This is what, so it is there here. So it is the ceiling limit which is there in section number 186. Okay, along with that, so I am talking about what? I am talking about either it can be loan guarantee and security. Regarding investments, now I am going to talk about regarding investments, because it is LIGS, right? Okay, regarding investment I am talking about now. So when I was discussing section number 2, clause number 87, if it is a case of CA inter students, okay, subsidiary company definition, when I discussed there we discussed one point called as restriction on maximum number of layers. So a company can hold, okay, subsidiary companies in a horizontal way, not in a horizontal way, vertical way. Okay, not more than 2 layers. Now in this section number 186, we are again going to discuss that. Okay, that the auditor is required to verify, okay, are the investments made by the company beyond 2 layers of subsidiaries, because it is prohibition. It is a prohibition that we need to identify and report. See, check whether the company has made investments through more than 2 layers of investment companies. Check whether the company has made investment through more than 2 layers. And one more beautiful point you just need to write. This is the amount which is given by the company to outsiders, right? Okay, so before you provide this, see whether the company has passed the board resolution as prescribed and obtained the prior approval. See, company now giving loan to someone else. So before doing that, okay, if the company is under default in paying their own borrowings, then they need to take the permission, prior approval from the banks and financial institutions which have provided their money to company. So company, in order to provide the loan to outsiders, first of all it must take, okay, the permission from the banks or financial institutions from where they have taken the loan. Okay, that is the important point you need to write there. Check whether the company has passed the board resolution as prescribed. So board resolution anyway it is required, and along with that, okay, they need to obtain the prior approval whenever required from any public financial institutions, okay, concerned, whether any term loan is subsisting. See, this company is having loans first of all, and it is again giving the loan to someone else. So for that purpose, they need to take, if it is required, okay, prior approval of the banks or financial institutions, okay, from where the term loan is in existence. Okay, that is the thing we need to write there. So with this point I just want to give another one point here, another one point, important points I am making you write the notes. Okay, next point. So companies providing the loans to outsiders. Now the interest rate what the company is charging on them, it shall not be less than, see, it shall not be lower than the prevailing government rate. See, government security, okay, rate of yield rate of 1 year, 3 year or 5 years or 10 years, okay, which is closest to the tenor of the loan. This is what we need to write. So now you can write the notes like this. The interest rate what the company charges, shall not be less than prevailing yield of 1 year, 3 year, 5 year, 10 year, okay, government securities. See, if my loan is near to 10 years, okay, whatever the loan the company is providing to outsider, okay, if it is near to 10 year, you need to compare the interest rate with 10-year government securities, 10-year tenor government securities. So if it is near to 3 years, then 3-year government securities you need to check up and you need to compare the rate of interest. This is the important point you need to write. These are the non-compliances. If it happens, then you need to go and report there. So first of all, to know whether the company is complying with section number 186 or 185, first of all you must know the provisions of section number 185 and 186. So without knowing the provisions of those sections, you cannot say whether the company is complying or not. For that reason, you are writing the notes for the same. Okay, I guess you are all getting the point. Okay, the reason for the same I am giving this notes. Okay, done. Next point. The company is not allowed to give the loan. LGS, loan guarantee security, when the company is defaulted in repaying the deposits it has taken. Repay the deposits it has taken. See, when there is deposit which is accepted by the company and company failed to repay the deposit to the public, okay, then how can the company give the loan to someone else? If the company is in default, it cannot provide loan to, okay, others. So that is what you are writing here. So the company is not allowed to provide any loan, guarantee or security when there is any default in repayment of the public deposit which is accepted by the company. Okay, I guess you are all getting the point. Okay. In the similar way, like how we have in 185, there is another register for 186 also. It is MBP2. It is the register to be maintained by the company to whom loan, security or guarantee given. Okay, MBP2. There it talks about only directors and their relatives, okay, or the business enterprise in which the director is, okay, interested in. But here it talks about what? It can be to any body corporate or at any person. Okay, this is 186. So what I just want to conclude here is, okay, with this I am done with the notes which is required to be given to you. Okay, done. So this notes is sufficient for you for going to exam. Okay, let us try to revise. So this clause number 4, it is talking about loan investment guarantee security. Okay, when the loan investment guarantee security is given to whom? To any person or any body corporate, then check whether 185 and 186 are complied. If not complied, give the details. Okay, what are the details to be given? What is the nature of the non-compliance? Okay, what is the amount that the loan is given to them, outstanding during the year, okay, and balance sheet date, outstanding balance is also required to be given. So all these notes is given for 185 and 186. in your book. Okay, with this I am done with clause number 4. Let us move to clause number 5. Detailed notes is given. Okay, clause number 5. It may take some 5 or 10 minutes extra now, but it saves a lot of time when you go for the examination. This 10 minutes what you spent on the book, on the notes, okay, this 10 minutes is not equal to the 10 minutes what you have before examination day. Okay, that though both may be 10 minutes only, but the value of this 10 minutes will change. Okay, the 10 minutes what you spend now is different from 10 minutes what you spend before the examination day or on the examination day also. Sometimes while we go to the examination, during the traveling time also we used to study whenever when we wrote our exam. Okay, even now also students used to, okay, they are reading whenever they go for the examination. Okay, in the autos and buses I see many of the students reading on the roads, reading on under the bus stops, etc. Okay, that 10 minutes is very, very important. Okay, so rather than wasting time on these notes, in that 10 minutes writing notes here, it is very helpful for you. Okay, done. So whenever you listen to the class, immediately you need to have a pen in your hand, write the notes whenever I dictate. Okay, whatever I dictate, you need to write the notes. Okay, your life will become miserable, okay, if you get this in the examination when you fail to write these notes here. Done. So let us go to next clause. This clause is talking about public deposits. This clause is talking about what? Public deposits. Okay, which is very, very important. Okay, so let me write some brief introduction for this. This clause is talking about public deposits. And CA Inter students, they have this chapter in their syllabus in law, okay, in law subject, but CA final students, you may forget this chapter because you studied this in IPCC. Okay, there are a lot of things to remember in CA final, so you may not get the time to remember this CA Inter syllabus. Okay, in Companies Act 2013, there are 29 chapters. So first 10 chapters are there in CA Inter and 19 chapters are there for CA final. Okay, in this there is one chapter called as, okay, chapter number 5, which talks about public deposits. So any money when the company takes from public, okay, it is treated as deposit, and it is so significant that there are stringent rules for repayment of public deposits. If a company fails to repay the public deposit, because it is collecting money from the public, not by way of share capital, by way of deposits, by way of borrowings, it is collecting money from public. So generally these deposits are accepted by banks. Okay, right, bank can accept the deposit from public. Okay, in the similar way, a company can also accept the deposit from public. Okay, and the provisions are so stringent about the repayment of public deposits. Okay, there are two sections, that is section number 73 and section number 76. Section number 73 and section number 76. Since I am the teacher for CA Inter law, okay, I know these sections very well. Okay, section number 73, it talks about company accepting deposits from its own members. Here, deposits from public. When the company is accepting deposits from members or public, section number 73 and 76 will, okay, both are there, and this chapter starts from 73 to 76A. Okay, these provisions are required to be followed when you take deposits from its members or public. Okay, there is a definition for public deposit which I am not going to discuss now, because that definition itself, it is given in the rule, and that definition itself is there. It contains, okay, 3 pages, almost 3 pages. Almost 22 or 23 points are there to define public deposits. That we are not going to discuss now. Okay, it takes 1.5 hour discussion to define public deposits. Okay, now if there are 73 and 76, what is 73 and 76? Deposits from members, deposits from public. If the company is accepting the same, then do one thing, okay, verify section number 73 and 76 are complied or not. Okay, but what is there in section number 73 and 76? Generally approvals. Okay, generally approvals. When the company is going to get the deposit from public, special resolution must be passed. Okay, when the company is going to get the deposit from members, ordinary resolution of members are required. Okay, it is required. Ordinary resolution in case of 73, special resolution in case of 76, that is required. Okay, these are the things so which are to be completed by the company. So after this I'm going to give you the notes. First let us discuss about this public deposits. Just now I told you regarding public deposits what is to be completed. Section number 73 to be completed, section number 76 to be completed, and along with that, okay, as these are called as deposits, RBI directives is also required. RBI directions shall also be completed. Directions are also be required to complete. Point number 4, okay, any other rules as per Companies Act, those are to be completed. And last point, if there is any default in repayment of deposits, then okay, the directions of court, NCLT, National Company Law Tribunal, or it can be Company Law Board. Previously it used to be called as Company Law Board, now it is okay NCLT. Both are given in the book. Okay, NCLT, CLB, or any court directions, court orders shall be completed. Orders shall be completed by the company. When there is default in company. This is applicable only when there is default. When there is default in complaint or default in repayment. See this. So let me read this clause number 5. In respect of deposit accepted by the company or amounts which are deemed to be deposits. Okay, I told you one thing. Okay, either it can be directly deposits or sometimes there is a big definition, right? Okay, in that definition many things are there where those are to be deemed as public deposits. Even if the company is if the company has taken the money by way of debentures. Okay, if the money is not repaid, then that debenture outstanding will be treated as public deposit. It is called deemed deposit. Deemed deposit because stringent rules are applicable for public deposits. So whenever there is default in repayment of any money by the company to the outsiders, then that is called as public deposits, and stringent rules are applicable on them. Okay, huge penalties the company is required to pay. Okay, done. Whether the directives issued by RBI and section number 73, 76 and other relevant provisions of Companies Act and rules made thereunder where applicable have been complied. If not, the nature of such contraventions to be stated, whether the approvals are taken or not, and any contravention you can write there. Okay, and if an order has been passed by Company Law Board, National Company Law Tribunal and RBI or any court or any other tribunal, whether the same has been complied with or not. So when there is any default, okay, then there may be a court order or NCLT order which needs to be complied by the company. Whether it is complied or not, we need to just report. This is clause number 5, simple only. Clause number 5, simple only. Okay, this you can write. Public deposits. Audit has to report what? Complaints of section number 73, 76, RBI directions, other rules and provisions under Companies Act 2013, and in case if any orders, if it is given by NCLT, CLB, court or RBI, whether that order is complete or not. Okay, whether the order is complete or not. These are the things to be reported in clause number 5. Okay, done. Come to clause number 6. It is so simple. Clause number 6. It is mostly relevant for cost auditors, in fact, but still okay, detailed analysis of this clause we don't need to make. Okay, we don't need to make. So detailed analysis of this clause, it is not required. Done. Whether the maintenance of cost records have been specified by the central government under subsection number 1 of section number 148 of Companies Act, and whether such accounts and records have been maintained, so maintained. Okay, so made and maintained. Okay, done. Simple. On this there is one video from my side. Okay, on YouTube, you can just watch. Okay, it contains from section number 145 to 148, 145 to 148, almost 4 sections. Okay, I recorded and I uploaded on YouTube also. Section number 148, subsection number 1, I am talking about. There are some companies, okay, some companies which are covered under this 148 subsection number 1. Okay, those rules and all, you can go and watch that video, but it's not relevant now here. Okay, 148 subsection number 1 specifies some companies. If you are covered under this along with rules, some rule is also there. Okay, based on turnover, etc., that companies have been identified. Okay, section number 148 subsection number 1 talks about some companies which are required to maintain cost records. Required to maintain cost records. Okay, now as an auditor, you need to check up whether these cost records are properly been made. Okay, preparing is not sufficient, maintaining is also required. Made and maintained. Company's cost records made and maintained if section number 148 subsection number 1 is applicable or not. Okay, whether it is maintained or not. This is what we need to report. This is clause number 6. Okay, extensive efforts may not be kept, okay, by the auditor when he is verifying this section number 148 subsection number 1. It is directly given in the guidance notes, in fact. Okay, it is not said by me, it is directly given in the guidance note. Okay, I will show you once. Why to have a doubt in mind? Okay, see this. Cost records. See, the order does not require a detailed examination of such records. Records examination is not required. You just need to check whether the cost records are made and maintained. Okay, and it is talking about only cost records. It is not talking about cost audit. So audit is different. Preparation of books of accounts is different. It is specified that, see here, it is not mentioned anywhere that cost audit. Cost audit is different. It is talking about what? Cost records only. Cost audit, it is the work of cost auditor. Okay, now our work is to check whether the cost records which are applicable as per section number 148 subsection number 1, it is maintained or not. Is there any detailed or is there any requirement on the auditor to check the records in detail? No, not required. Okay, done. This is clause number 6. Come to clause number 7. Is the notes given? Yes. So auditor has to report whether cost records are made and maintained if section number 148 subsection number 1 comma subsection number 1 or any notification by central government is applicable. Any notification by central government is applicable. If it is applicable, okay, then you need to write. I guess you are all getting the point. Then you need to report what? Whether it is made and maintained. Come to 7. Okay, beautiful point, interesting point, keep star marks. Okay, favorite question for ICA. Every time out of 5 attempts, when you take 5 attempts, almost 2 to 3 times it is there. Okay, this question, since from long time it has been asked in the examination. Okay, every time, for every 5 attempts, almost 2 or 3 times they ask this. Okay, this is clause number 7. Statutory dues. So what is statutory due? Statutory due is the liability of the company to pay under statute. There are many laws which are applicable for the company when it is functioning. Okay, so there are different laws. Under different laws, company is required to pay the money to the government. Okay, these are called as statutory dues. Okay, so whether the company is regular in payment of the statutory dues or not, that needs to be reported. If not, if the company is not regular, then you need to report. Then the auditor needs to report one thing. He needs to check, he needs to obtain the list of the statutory dues which are pending on, okay, pending on the balance sheet date, and he needs to, okay, identify those pending statutory dues which are pending for a period which is more than 6 months from the date they became payable. Okay, I guess you're all getting the point. Let us now discuss that. Okay, so we'll write the notes later. Let me write the example here. You don't need to copy. Okay, after that I'll give you the notes. Now I'm writing the example. Say, on the balance sheet date, auditor needs to obtain the list of the statutory pending dues. Okay, list. So from that list, he needs to obtain what? He needs to obtain those statutory dues which are long pending. What is called as long pending? It is 6 months from the date, okay, of becoming payable. So imagine income tax, not income tax, it is example, it is PF. It is PF. Okay, PF which was liable to be paid by the company on September 1st. September 1st of 2021. Now the balance sheet date is March 31st, 2022. So on this date it is still pending, and it became liable, it became pending from the date itself, from the date September 1st itself. Now you need to calculate from this date 6 months. From this date 6 months. See, plus 6 months. It is March, okay, 1st, I guess. September, October, November, December, okay, January, February 28th. Okay, that is March 1st. So 6 months is been already done, and it is still pending on 31st March. Then it needs to be reported. From the date it became payable. If it is already 6 months and it is still there on the balance sheet date, then go and report. Imagine a same case where the pending, okay, the liability came into existence from, it is not September, imagine it is December 1st. Now you calculate 6 months. December, January, okay, February, March. It has been only 4 months. Okay, by that time you came to what? You came to balance sheet data. So on this date you need to check, is there any balance still pending which is more than 6 months from the date they become payable? Okay, it is only 4 months. It need not to be reported now. Okay, this need not to be reported now, but the first one, it needs to be reported. I guess it is clear for you. Let us write some notes for it. Okay, write the notes. Is the company regular in depositing? Okay, what about this? Which clause is this? It is 7. Okay, whether the company is regular. Whether the company is regular in making payments, of statutory dues. Okay, if not, okay, what is to be reported? Okay, if not, report what? The extent of outstanding arrears. The extent of outstanding arrears as on balance sheet date. Which is pending for how many days? How many months? Which is pending for 6 months. From what date? 6 months from the date the due became payable. So from that date we need to calculate the 6 months, and it is still in existence of as on balance sheet date. Then you need to report, okay, that outstanding balance you need to report. So all the list, okay, whatever it is more than 6 months, then you need to write everything. You need to give the details of every statutory due which is still pending, which is more than 6 months from the date they become payable. Okay, done. So this is clause number, okay, clause number 7 first part. Clause number 7 first part, I guess it is A. You can write it as A. Subclause A. There is another clause, subclause B. Okay, before going to subclause B, let us have some discussion on disputed and undisputed. Okay, statutory dues. Statutory dues can be two types. Okay, disputed, undisputed. Undisputed. Second one is disputed. What is disputed and undisputed? Okay. Generally, whatever the tax we need to pay, it is based on self-assessment. Okay, when you pay on self-assessment basis, the department will accept the same. If the department is not accepting, they will demand you back more amount to be paid by you now. Okay, if you are not agreeing the same, okay, there is a clear difference between the amount they demand and amount you paid. It is clearly there is clearly a difference between these two. Okay, then it is called as, okay, disputed statutory due, where you are not willing to pay the amount because it is disputed. The amount what they are saying, amount what you are paying, both are not matching, and you are not agreeing for the same, okay, whatever they are asking you to pay. It is called as disputed statutory due. So the amount is still pending. The statutory due is pending because of the reason what? Because of the reason existence of dispute. Okay. Then come to clause number B. Clause number 1, whatever I discussed now, it is undisputed. You are required to pay that, and there is no dispute on that also. Okay, it is your liability, you just need to pay, but you fail to pay. Then come to clause number A. Okay, then whatever we have written the notes, it is applicable. And it is for what? Undisputed. Disputed. And you self-assessed, and there is no dispute also. Okay, it is your liability now, you fail to pay. That is undisputed. Come to point number B, where there is a statutory due which is still pending, and it is because of what? Because of dispute only you fail to pay. Okay, then you need to write, so clause number B. So for clause number B, what is to be reported? Go to the book now, okay, see, where the statutory dues referred under clause number A have not been deposited on account of any dispute. You have to pay, but you did not pay because of dispute. Then the amounts involved, okay, and forum where the dispute is pending, that is to be reported. Okay, how much you need to pay. So under the dispute, point number 1, amount involved. So in clause number B, what is to be reported? The amount involved. What is the amount which is still pending to be paid because of the dispute? The amount involved in it, and the forum where the dispute is pending. What is forum? It is the authority. Say we have an income tax department, right? Income tax department, customs authorities, from where, okay, this dispute is pending. Okay, under whom this is there, which authority it is there, either it can be commissioner or principal commissioner, many are there, right? Okay, IT, under which authority, okay, this dispute is been pending, that we need to write. Amount involved and forum in which the, okay, dispute is pending, that we need to report. So this is clause number 7. Clause number 7, statutory dues. Let us have a quick revision of the same. Okay, clause number 7 contains 2 subclauses. Okay, clause number A talks about undisputed statutory due. Okay, clause number B talks about disputed statutory due. When it is undisputed statutory due, okay, auditor has to report, okay, whether the company is regular in making the payments of statutory dues or not. If not, then he needs to write the outstanding arrears as on the balance sheet date, okay, of those statutory dues which become payable, and it is pending from more than 6 months, then it needs to be reported, and you need to write the list there. Whatever it is pending, all the list you need to write there, all the statutory dues. This is point number 1. And in coming to point number B, that is subclause number B, it talks about disputed, okay, statutory due. When there is dispute and you did not pay the amount to the authority, then you need to report what? Amount outstanding, amount involved in it, in the dispute. And point number 2, okay, the forum where it is pending, under the authority where it is pending, you need to write the name of the authority. Okay, I guess You are clear with this clause, clause number 7. Come to clause number 8. Okay, it is clause number 8. Clause number 8. Easy only. Clause number 8 talks about, it is a new clause in fact. Previously it used to be, it is not used to be there. It was not there before, okay, 2020. In 2016 it was not there. It is newly inserted. It is newly inserted. Okay, now what is it saying? Okay, under direct tax, like income tax 1961, okay, you need to report the income under self-assessment basis. Under self-assessment basis. Now, if an assessee fails to keep certain transaction in their books of accounts, and that income is not disclosed at all. Okay, this is called as income escaped. Okay, escaped income, right? So you need to report something. You need to report some income, but in the books of accounts it is not taken, and it is called as, okay, income escaped from assessment. In fact, okay, this is called as what? Income escaped from assessment. Now, every time for 4 or 5 years, and after the BJP government was, okay, came into picture, after that they introduced one scheme called as disclosure of undisclosed income or unrecorded income. So in the previous year, whenever you fail to keep some transaction in the books of accounts, failing to disclose the income, now you have a window, okay, a window in the current year to show that income, to disclose that income and to pay the tax on that income. Okay, and using now this window, okay, this company is now disclosing the unrecorded or undisclosed income previously. So in the previous year there was some unrecorded income. Now in the current year, using that window, you are showing this income. Okay, you are taking the transaction in the books of accounts now. Now what this, okay, clause number 8 says, if you are doing the same during the financial year, okay, if you are disclosing the undisclosed income, unrecorded income in the current year in which this order is applicable, this CARO is applicable, okay, then you need to report one thing. If there is any such type of recording new income now which was undisclosed or unrecorded in the previous year, then you need to report what? You need to report, okay, whether it is properly recorded in the books of accounts during the year. You disclosed, okay, you recorded now, okay, but it is not correct. You recorded now, but it is not correct. So what is your work now? Okay, what is your work now? So let us have a quick notes of it. Okay, this is clause number recording, clause number 8, recording the undisclosed income in the books of accounts, during the current year. If this happens, okay, if it happens, then only this clause will be applicable. If it happens, then auditor has to report what? Whether unrecorded income, unrecorded transactions are properly recorded. Okay, unrecorded transactions are now first time taken into what? Books of accounts. Then we need to check what? Unrecorded transactions are properly recorded in the books of accounts during the year. This is what we need to report. This is clause number 8. Point by point, word by word, we need to see. Okay, there are some unrecorded transactions in the books of accounts, okay, previously. Because of that, they failed to disclose the income in that financial year. Now, using the window in the current year in the income tax portal, they are disclosing the income in the current year. For that purpose, they need to record whatever they failed to record. Okay, when they are recording the new transactions for the first time, okay, then as an auditor you need to report what are the recorded incomes now, okay, recorded properly in the books of accounts or not. This is what it is said in clause number 8. Let us now read carefully. Okay, whether any transactions not recorded in the books of accounts, previously not recorded, because of that what happened, they did not disclose at all as an income in that financial year. Okay, now they have been surrendered and disclosed as income during the year in the tax assessments. Okay, if so, if it happens, okay, whether previously unrecorded income has been properly recorded in the books of accounts during the year or not, you need to check. During the year or not, you need to check. This is clause number 8. This is clause number 8. Okay, done. Now clause number 9. Clause number 9. Clause number 9. Slowly we are moving into all the clauses. Clause number 9. See, in fact, by size it may be big, okay, but it is so simple. Done. Clause number 9. Clause number 9 talks about borrowings. Clause number 9 talks about borrowings. Previously in clause number 3 and 4, what we have seen, the loans which are given by the company. But now what we are going to focus about, okay, it is the borrowings made by the company. It is the loan taken by the company. Okay, now if it is the loan taken by the company must pay the principal and interest on time. Okay, on time. So now in this clause we are going to report when there are any, okay, defaults by the company in repayment of principal and payment of interest. Okay, that is what we are going to report. Done. So there are how many clauses? A, B, C, D, E, F. So almost 6 clauses are there. It is the biggest, okay, biggest, but it is, believe me, it is so simple. Okay, so simple. So let me highlight few things. So only highlighted things you need to write in the notes. Done. Okay, you need to fill up all A, B, C, D, E, F. Done. We are in 9th class. A I am now reading. Okay, whether the company has defaulted in repayment of loans or other borrowings or in any payment of interest. Okay, repayment of principal, payment of interest. Okay, to any lender. It may be from a person or it may be from a bank or financial institution, anything. Okay, if there is any default, if yes, then period and amount of details, okay, amount of default to be reported as per the following format. This format you need to remember. You cannot do anything. Okay, you cannot do anything other than remembering this format. Okay, format contains 6 lines or 6 columns. Okay, first one, nature of borrowing. In what way you borrowed? Point number 1. Name of the lender, from where you borrowed, from whom you borrowed. Okay, point number 3. Okay, amount not paid on the due date. So due date has come, but amount is not paid. That is the amount you need to report. Point number 4, whether is it principal or interest, and number of days of delay, and any remarks you need to write here in the last column. Okay, this is the format you need to remember. Yeah. Okay, done. Subclause A, when it is applicable, when there is default in FAU, default in borrowings. Okay, in this borrowings, repayment of principal, and we call it as payment only, not repayment. Okay, payment of interest. Okay, and if there is any default, then give the table. Read the table containing 6 columns, and those columns I am not going to give now. Okay, this is subclause number A. Come to subclause number B. Okay, when the company is willfully defaulting the repayment of loan, then there may be some cases where the banks or any lenders, okay, they may declare this company as a willful defaulter. There may be some instances where the company, okay, may identify, okay, the banks may identify the company as, okay, willful defaulter. If it is yes, then report here. Whether the company is declared willful defaulter by any bank or, okay, finance institutions or any other lender. Okay, what is this? Report whether lender has declared the company as what? The company as willful defaulter. Intentionally they are not paying. If it is declared, then you need to report here. Come to clause number C, subclause number C. Okay, done. So when the company is taking the term loan, it shall use that money for the intended purpose. For what purpose they have taken the loan, for that purpose only they need to use that loan. So if it is just, then there won't be any problem. If the company fails to utilize the term loan for any purpose other than for which it is borrowed, okay, then you need to report here. See whether the term loan were applied for the purposes for which the loans were obtained. Okay, whether the company is utilizing the loan for its purpose or not. Okay, if it is not, then the amount of loan so diverted and the purposes for which it is utilized, you need to write. Okay, this is subclause number C. See, whenever the company borrows, okay, there will be some purpose. When it is term loan, see, term loan. So you need to report what? Whether the term loan is utilized for intended purpose. Okay, if it is yes, go and say yes. If it is no, okay, you need to write now. Okay, utilized for intended purpose. Yes, go and write it as yes. If it is no, okay, then report what? Report amount involved, amount of loan taken in such a way, and the purpose for which it is utilized. Beautiful point. Okay, term loan shall be utilized only for intended purpose. If it is yes, there is going to be any problem, you can just go and report there. Yes, it is utilized for the intended purpose only, because the term loans are generally taken for fixed assets, for the purchase of fixed assets. Okay, this is the intended purpose. If the company uses this money for any purpose other than this, then come here and write there the amount involved, and point number 2, purpose for which it is been utilized. For what purpose actually they have used, that you need to write here. Okay, clause number C is also over. Come to clause number D. So loans may be two types: short term funds, long term funds. Okay, when the short term funds are taken, it shall be used for short term purposes only. Okay, now in this clause, what it is asked you to report whether the funds raised on short term basis have been utilized for long term purposes. Okay, if it is yes, nature and amount to be indicated. Okay, let me write here. This is clause number D. Clause number D. What is clause number D? When whether short term loans are used for long term purposes. If yes, then what we need to do? If yes, point number 1, point number 2. If yes, amount we used, see, and nature of utilization, amount and nature of utilization. For what purpose? Again the same, nature of utilization. Okay, this is subclause number D. In detail I am writing everything. So when it is asked in the examination, first you must dance and you must write the answer. Okay, normal kaadu, full dance. So everything I am writing here in detail. See, these are the important clauses now. Okay, newly added. Done. Whether the company has taken any funds from any entity or person on account of or to meet the obligation of its subsidiary, associate or joint venture. If yes, details thereof with nature of transactions, amount in each case. Okay, so simple. Here the company, there is a company, okay, there is a company. This company is having what? Subsidiary company, and this company is having joint ventures, or this company is having associate companies. Okay, so to incur some money in relation to this subsidiary companies or joint ventures or associate companies, okay, this company has borrowed. Okay, this company has taken loan. This company is borrowing the money for the purpose of what? Intended to be used on subsidiary companies, joint ventures or associate companies. If it is yes, okay, the details thereof with the nature of transaction, amount in each case must be, okay, reported. This is clause number E. Subclause number E. What is subclause number E? Borrowings made by the company, whether the borrowings made by company in relation to what? In relation to its subsidiary company, associate or joint venture, then report what? Report, okay, nature of transactions. Report nature of transactions and amount in each case. Nature of transaction, right there, nature of transactions and amount in each case. Then report nature of transactions and amount in each case. Amount in each case. Okay, this is E. Come to F. Okay, this is talking about, F is talking about the company has taken the loan. Keeping the security of the, okay, security as the shares in subsidiary, joint ventures and associate companies. Say, let me write here. Okay, there is a company. This company is having subsidiary company, joint ventures or associate companies. When can we call this company as a subsidiary company? When it is holding some shares, right? Okay, these shares, whatever this company is holding in the subsidiary company, these shares are kept as security to a bank from where this company is borrowing. If this situation exists, okay, when the company is taking the loan from a bank, keeping the security as the shares which it holds in, okay, subsidiary, joint venture or associate company. If this happens, go and give the details. Okay, done. So clause number F. If the company, okay, raises the funds, okay, by keeping the securities of subsidiary company, joint venture, associate company, okay, associate company as pledge, nothing but security as pledge. Okay, then give the details. If yes, give the details. Give those details. And also write, is there any defaults? Give those details. Specify defaults in repayments. Okay, this is clause number F. With this we are done with clause number 9 also. Out of 21 we are done with 9. I guess all the 6 points are given to you. Subclauses A, B, C, D, E, F. Okay, all the things are detailedly explained. Now let us move to subclause, clause number 10. Done. Clause number 10 talks about, okay, utilization of funds. Say, when you start the company and this company is having the share capital, then in what ways you can collect the share capital? By way of initial public offer and further public offer. For the first time, if the company is offering the shares to public, okay, then it is called as initial public offer. For the second time and any subsequent issue, it is called as further public offer. Okay, so share capital can be collected by the company by way of IPO, FPO. Okay, if the money is collected, Okay, whenever the company is making the public offer, the company has to issue prospectus, and in that prospectus we need to write the purpose for which the capital is being issued. Shares are being issued. Okay, and in this clause you need to report, is the company utilized the money for the same purpose whatever it is written in the prospectus, because the company has collected money by way of IPO, FPO, whether those funds are being utilized for the intended purpose or not, you need to report here in this clause. This is clause number 10. There are 2A and B. So under A I am going to write now. Okay, let me read this A. Whether the money is raised by way of initial public offer, further public offer. See, whenever the shares are offered to public, it is called as what? Public offer. Okay, shares are offered to public. For this we need to issue what? Prospectus. Okay, prospectus. And this prospectus, can be issued in case of IPO, FPO. In both the cases, in this prospectus, we need to write the object for which we are collecting the share capital. Then we need to write what? See, during the year you raise the money by way of IPO, FPO, and whether those were applied for the purposes for those are raised. If not, give the details together with delays, default, subsequent rectification. What is delay? Okay, you collected money but you failed to utilize the money within time. This is called delay. And you failed to utilize the money for intended purpose. This is called default. Okay, and coming to third point, what is third one? Subsequent rectification. Initially used for another purpose, but later you brought that money back to the intended purpose. This is called a subsequent rectification. If it happens, go and give the details. Okay, now done. Let us frame the notes for this. Okay, public offer is given by way of IPO or FPO. And during the year whether funds are utilized for intended purpose. Yes or no? Yes, there won't be any problem. Go and write in the CARO clause number 10. Yes, these are utilized for intended purpose. If it is no, then you need to report the delay, default, subsequent rectification. What is delay? Delay. Okay, lately you are using the money. What is default? For intended purpose you are not utilizing the money. Okay, this is default. What is subsequent rectification? You initially utilized it for another purpose, but later you are bringing back the money for intended purpose. This is called subsequent rectification. Okay, these details shall be given if the answer is no. This is clause number A. Subclause number A. Come to subclause number B. It talks about two things. So previously in subclause number A, I talked about what? Okay, public offer. Shares are being offered to public. So entire general public, they can just come and buy. Okay, this is subclause number A. In subclause number B, what I am going to write here is in subclause number B. Okay, one thing you need to understand. There are different types of offers. Okay, one is public offer. Okay, second one is private placement or preferential allotment. Don't worry, I'll give you the details of the same. Okay, what is private placement? Private placement is defined under section number 42. It is defined under section number 42, not 62. Section number 42. Okay, where shares are not offered to general public, shares are offered to only few identified persons. Okay, board of directors will identify few persons, and to those persons only shares are to be offered. Okay, this is called private placement. In a financial year, only 200 persons can be identified. Only 200 persons can be identified. And if shares are issued to those persons, then it is called as what? It is called as private placement. And these 200 shall be counted separately for equity shareholders, preference shareholders, and debentures. So in an aggregate, there may be 600 private people. Okay, and this offer is called as private placement. This offer is called as what? Private placement. It is section 42. Okay, shares are offered to, what can you write here? Shares are offered to identified persons. How many persons may be there? Only 200. Only 200 for each type of security. For each type of security, that is equity share, preference share, and debenture. This is first point. And to issue this private placement, to have this private placement by the company, special resolution must be passed. Special resolution of members must be passed. Okay, these are the provisions of section number 42. In detail I am not going, because section number 42 itself takes in a revision class itself it takes for me 26 minutes. Okay, this video is already there on my YouTube channel. You can just go and watch for more details. Okay, so just few details are given here. Okay, only 200 people, the identified persons can be. And second point, special resolution is mandatory. Special resolution is mandatory for private placement. Okay, other details you can go and watch that video if you are a CA inter student, and CA final student, it is not relevant also. Okay, so all these provisions you don't need to remember. Okay, just to get the knowledge of private placement I am telling this. Okay, and what is preferential allotment? Preferential allotment is nothing but, it is discussed in section number 62, where when the shares are offered to public, before they are offered to public, first of all the company shall offer the shares to existing shareholders. The preference shall be given to existing shareholders. If they say no, then only they need to go to outsiders. This is there in section number 62, further public offer, and that is preferential allotment. Okay, these are also called as right shares. Okay, right shares. The right shall be given to the existing shareholder first before going to the public. The existing shareholder will get the right to accept, reject, or renounce. Okay, these are the provisions which are there in section number 62. Now, as an auditor, under this subclause, you need to write few things. You need to report few things. Okay, if there is any private placement or preferential allotment happened in the current year, then are the provisions of section number 42 and 62 are complied with or not, and whether the money which is collected by the company is utilized for the intended purpose or not. This is this is what you need to report in this clause. Okay, done. See this. Whether the company has made any preferential allotment. What is preferential allotment? 62. What is private placement? It is 42. Okay, allotment during the year. Okay, if so, whether the requirements of 42 and 62 are complied with. Okay, if they are complied, no problem. And funds raised have been see, the clause is not yet not yet over till now. Okay, and the funds raised have been used for the purposes for which the funds are raised. So the main intention of clause number 10 is utilization of funds. Okay, and these funds, whatever the company gets by way of what? Public offer, by way of preferential allotment, or by way of private placement. Okay, whatever it can be, the intention is to use that money for intended purpose. If it is not, go and report. See, the funds raised have been utilized for the purpose for which the funds were raised. If not, provide the details thereof. And the nature of the non-compliance shall also be reported. Okay, this is subclause number B. Subclause number B. See, preferential allotment, and second one is private placement. Okay, what you need to write in the clause, whether 42, 62, section number 42, 62 provisions are complied or not. Okay, complied or not, money or and the money collected is utilized for intended purpose. If not utilized, give the details. If not, give details of non-compliance and amount involved in it. Okay, give the details of non-compliance and amount involved in it. Okay, with this I am done with clause number 10 also. Clause number 10. Clause number 10 also. Let's take small break now. In the next class, I will be closing all the 11 sub clauses. Okay, simple only. So all the big clauses are over. This is the second. Okay, second. Second session on this. Okay, another 1.5 hours, I guess. So there may be another 1 hour to 1 hour 15 minutes discussion still left. All the details are to be given. Okay, regarding clause number 11 to clause number 21. Okay, done. So with this I am winding up this session. Okay, in the next session we will be starting with clause number 11 till clause number 21.